Good afternoon. Thank you for joining us for today's webinar. My name is Sean Bryan, President of Quick Rate, and I'm pleased to be joined by David Surrey. David's going to handle the second half of the presentation today. So again, thank you all very much for joining us. You will receive a link to today's recording along with a copy of the slides in an email sent to you tomorrow afternoon or Friday morning. But they will both, the email will contain a link and a copy of the slide deck. All right, so we're going to talk a little bit today, again, just a little bit about what's happening today. We're going to talk about the Quick Rate marketplace and its capabilities. David's going to take you through a walkthrough of the marketplace throughout the presentation. Please submit any questions either in the chat feature or in the Q&A, and we'll monitor those and either take them at an appropriate break in the conversation or certainly at the end. But please go ahead and submit those as you think of them. Just a reminder of some of the other things that Quick Rate does besides the marketplace. We do offer a CECL solver solution, of which many of you have worked with us on. We also do loan reviews for any of those interested in looking for a third-party external loan review. I think I think we talked about this last year. It's kind of like a little bit of deja vu. We're really kind of in the same kind of sense of feeling around the economy, right? A lot of talk around are interest rates too high? What's the impact going to be of tariffs? All the while, the economy just kind of continues to cruise along, right? Rates have stayed higher. Inflation is moderating, but it's still probably above at a level where the Fed would like it to be. And so, again, I think it's been, reasonably a good start to the year for most of us. It always can be better, but again, I think overall it's been pretty good. And I think it's still kind of a little bit of an open guess which way we go. I think things will probably slow in the second half, which will mean rates will probably start to come down gradually. Again, it's there's certainly a lot of noise out there today. So far, obviously we'll have some new call report numbers here everybody's in the midst of filing, but certainly in a couple of weeks we'll have updated numbers. But so far the year for 2025, assets at the median are up. Share deposits at the median are up. Membership in the aggregated is up. At the median, it's slightly down. Loans are down at the median. Delinquencies are up, but net income is up, right? So I think we're doing a great job managing what we've been thrown so far this year. But halfway through it, roughly, it feels pretty good. Deposit growth, certainly been better than it was. Deposits do remain expensive. We are, in the industry, kind of relying on our CDs for funding growth, and deposit pricing remains kind of competitive with market rates. So at this point, I'm just going to, if you don't mind, we're just going to do a couple of quick polling questions, and I'm going to go ahead and just launch this. Again, appreciate any participation, but kind of at the halfway point here, do you expect to have excess liquidity to invest during the second half of 2025? So we'll just give this 30 seconds or so. Go ahead and end this one. Share the results. So 63% of you responded will, and 37% won't. So thank you for participating in that. One final question just around funding needs. Do you anticipate needing funding this year? Again, just a simple yes or no question, and we'll give it about 30 seconds or so. Probably not surprising. This is almost going to turn out to be the exact reversal of the previous question. Let me go ahead and end that. And that's kind of what, so, 2/3 of you, 64% won't, and 36% of you will probably need some funding this year. So again, thank you for participating in the polling questions. I think again, where rates have been have certainly impacted our balance sheets and members' expectations and margins, much like it did last year. Again, I think we've done a very good job managing all of that, but I think probably there's going to remain a little bit of a tail here for our members in terms of what they're looking for in their deposit rates. I think we will. I just don't see any way around it that we won't continue to have increased competition for every share deposit, right? I think the continuance of new offerings, the digital capabilities of fintechs and larger institutions to really target individuals with deposit offerings, isn't going to go backwards, right? And so it's just going to be, I always hate to use the word new normal, but I just think there's going to be continued competition for every deposit that we can try to obtain. Certainly seen, as a result of that, decline in our non-interest bearing, share deposits, right? That everybody's looking for a little bit of yield when rates are elevated. Certainly, I don't think it's ever been taken for granted, but member inertia staying with us regardless can't be taken for granted. And I do think there's something to be said, for stability of share deposits taking precedence over cheaper deposits, right? I think we want to reward our best members. We want to price our best members who've been with us a long time, and I think that's gonna continue to be top of mind. I think the other areas we'll talk about too are just uninsured member deposits. Will remain kind of a topic of concern for us, for examiners, but I think it should be for all of us as well, just to make sure we understand how many of our share deposits are uninsured, and then make sure we have funding that could potentially cover that if those were to exit sooner than we would anticipate. Have we seen the high in interest rates? I think certainly on the front end, we have seen the high for this year. It remains to be seen what we'll see on the back end. I think the momentum is building that, while likely not here this month, the Fed in September will probably lower rates, and maybe again, it's in December. So again, the Fed controls the front end, the market kind of controls the back end. So I do think it's likely from the short end, we've probably seen the high for the year. Does that change your investment strategy, right? Again, depending on your timeline or outlook, if it's a 1 or 2 year horizon, we might want to make sure we're loading up those 1 and 2 years, because again, a good chance between now and the end of the year we're going to see rates come down on the front end. And so locking in longer term CDs, probably a little bit of probably caution still here. I think you could start to nibble, but again, I think there's probably a good chance that the back end may stay a little bit more stubborn. The 10-year, probably Treasury will be probably stable to a little bit lower. So again, just depending on where longer term CD rates come in, you can kind of evaluate those, but I do think we'll probably get some steepness in the yield curve here as the year continues. Again, we certainly thank you for working with us. Great for those of you who are not members. Thank you for attending the webinar. Again, I think we have been for years, 36 plus years, the best place to find CD rates if you're an investor. David's going to again kind of walk you through the marketplace, but this just kind of gives you an idea where rates are, and you can see, right, we've been kind of flat to a little bit inverted most of the year. Again, I think over the next couple of months, we're probably going to see the front end go a little bit lower, and we'll see what happens with the longer term CDs. I think again, if your time horizon's 2 years and under, it may be worth trying to get ahead of that. Beyond that, then I think we'll probably want to take a little bit of a wait and see where institutions come back and post rates. I think for most of us, deposit growth is going to remain difficult. I think in the aggregate, we'll continue to see the industry rise. But, again, I think larger institutions have greater deposit gathering capabilities than some of the smaller credit unions. So again, I think that market's going to remain challenged. They will be, remain expensive, even though the front end will probably bring down some rates. I think there's going to continue to be, there's just this, under support level of just, I think deposit uncertainty and liquidity uncertainty that is making every institution, whether it's a bank or a credit union, can continue to fight very hard for deposits, and particularly when a lot of the growth this year has come from CD funding. I would anticipate that that pricing will remain very competitive and relatively expensive. Share pricing has certainly been in touch with market rates. So again, either further support for those deposit rates remaining very, very competitive. Again, I think for us, right, we're trying to, on the issuing side, if we're trying to, manage our costs, fortunately, many of our costs or share deposits are already low cost in transactional accounts. But I do think we'll probably continue to see some migration from lower rate checking and savings into higher yielding money market or CD accounts. Again, your best members are going to remain acquisition targets of other institutions. I think one of the things that is very clear when you're trying to attract deposits from members, the members with the most money are likely to have money elsewhere, and so as a result, that's why they are targets of other institutions. Is that those institutions where they have other money, are probably trying to reach out to them to try to attract more of their wallet share for their own institution. So those members are going to remain acquisition targets, into the future. So again, you have to be vigilant, and it'll be very competitive. Understanding your uninsured member deposits. Again, I think this is an issue that's just going to remain with us. I think, again, it's a best practice to know who they are and how much they have. And I think it's a best practice to make sure you have some liquidity sources that can react to, any unexpected exit of larger depositors. And again, it's those uninsured members who are over the limit, who are probably the first who are going to respond to something, some type of activity, or just a desire to have all that money insured. In terms of funding, right, when you can, try to employ as best you can a diverse mix of sources. Stay in touch with those liquidity providers. Again, Quick Rate can be that for you if you need to. Make sure you can test the capacity. Make sure you can attract money when you need to. And then just, I think, again, a best practice, just make sure we're documenting and monitoring any factors that could impact, adversely your ability to raise funds. So from final thoughts and takeaways, just continue to monitor your members. I think, it's always, what we're trying to do is maintain discipline with both our loan and share pricing. I think rewarding our best members and stability is of higher value today than ever. Review our policies, monitor those uninsured member deposits, and stay at the ready, right? I just think liquidity is something you don't, and so you just want to always stay in close touch with your liquidity. All right, so we're going to start talking about the marketplace and some highlights. David, I don't know if you want to take these slides or you just want me to take them, and then we'll jump into the demo.
Thank you, Sean. Now I'll go ahead and take it from here. Let's see. I should be able to share my screen here in a moment. There it goes.
I see it.
All right. So thank you, Sean. For those of you that don't know, my name is David Surrey. I've been with Quick Rate for the last 19 years. So I've spent quite a bit of time with Sean O'Brien. Let's talk about some of the highlights of Quick Rate. So as Sean mentioned, you can use QuickRate on either the funding or investing side, and that's important. We're a subscription-based service where you're able to either invest your excess liquidity, and for those of you that answered those polling questions, this might be a good source for you if you're not already using QuickRate. And then for those on the other side of the coin, if you're looking to bring in non-member funds, you can do that as well. Currently, well, we've been around since 1986, so almost 40 years at this point, and we have been hovering around 1,300 credit unions as far as our subscribers on the credit union side, and about 1,700 or so community banks that are subscribers of QuickRate. So again, this slide is just here to reiterate that you can do both. And this is the thing I want you to keep in mind when we talk about doing one or the other. You may be in one situation today, but 6 months from now, 12 months from now, 2-3 years from now, you may be all of a sudden in a funding situation. And with QuickRate, you can use it on either side. So if you started out as an investor, then you call our support team and go, hey, I need to be able to bring in 5, 10, $20 million right now because my loan growth is skyrocketing. You can do that as well. So that said, some important facts to remember about QuickRate, and the top 3 things that I think about here are that it is a direct platform. So this is a non-brokered platform that may not be as important to credit unions as it is to our bank side, and some of you credit unions may care as well. Direct just meaning a transaction between you directly with the issuer if you are on the investing side, and obviously vice versa if you're on the funding side. So non-brokered, very important to us, very important designation to QuickRate, and hopefully important to you as well. Our tools automate the process of whether, again, funding or investing. So there's not a whole lot of, there's really no paperwork for you to fill out. Back in the olden days, you would have to fill out a bunch of signature cards, and there would be a lot of faxing going back and forth. Now, with our quick tools, what we've done is just automate that process. So very important to make this transaction very quick. So the reasons for our success kind of bleed into that. Our rates have always been better, which Sean mentioned kind of at the beginning of this. It being a direct transaction because you're in turn cutting out the middleman broker that would normally be there to collect their fee in the middle. And sometimes you may know that fee, sometimes you don't know that fee. There is no middleman here. You can think of us as a dating service where we provide you the way to get in touch with one another, but then the transaction is direct, which usually translates to a higher rate for the investor. Our customer support, have to shout them out. We get so much feedback, me being on the credit union sales side, about how great Jennifer Kelly, Andrea Crockey, and Zoe Osborne are in helping our community of credit unions and our banks, of course. And the last thing here to remember, just how easy we can make the investing process, and not just the initial investing process, but also keeping up with all of your CDs, the reporting side of it, the call report side of things. So, and we'll go into a little bit of detail when we log in live to show you this exactly, but for those of you that don't know already. Little too far there. Let's go back. There we go. So, as I mentioned, we've been around since 1986 and almost just about to celebrate 40 years. So we've been around quite a while, which has led into us being an industry leader here. Direct CD investing is literally what we've done, and funding for community banks and credit unions. So just it comes natural to us to have been recognized by different credit union leagues, different credit union leagues and different associations. Our regulatory specialist, Debbie Walker, who does meet with the FDIC and NCUA annually, and she's the one that stays on top of the hot topics, the newest things that are going on One of those things for the last couple of years, as many of you are aware, CECL, which we also do, and that's a whole nother webinar, something we do pretty well at this point. And we can certainly explore that for any of you that are interested that don't know about it. But just a couple of things to mention there. So the next slide, this is a snapshot of yesterday's rates. So these are actual rates that are in the marketplace. Wanted to point those out. The two slides that Sean showed had those exact same rates on it. This is just a little bit more of an easy view for that. So you can use these when we send you this presentation to compare, well, what is my broker getting me? What is my source for CDs getting me? So just a quick way for you to be able to go, yeah, the quick rates are 25, 35, 40 basis points better than what I'm getting currently. So a couple more important facts to take away from our service. Direct listing service, more banks. That kind of refers to, there are a lot of banks out there that will not work with brokers. So keep that in mind. If you have only one source for CD investing, you may want to consider just having other sources. Maybe that be Simply CD, maybe that be your corporate credit union, and potentially also, obviously, Quick Rate. Because there are, like I said, like I mentioned earlier, we work with anywhere between 16 to 1,700 community banks that are listing rates. And now within the last 5 years, I've seen a lot more credit unions also listing rates. So meaning those are, if you have excess liquidity, where you can place your money. The no third-party fees, that's what I meant by direct investing. So again, kind of thinking of us as a dating service where we connect you, but we're not involved in the money portion of the transaction. So let's actually take a look at a live look by logging in, and I'm going to walk you guys through that. All right, here we go. So when you first log into Quick Rate, this is your homepage. It just lets you know a few things about, do I have any money maturing today? Do I have any investments or deposits that are coming due that I need to take a look at? And we're going to take a brief look at this header here, jump right into view rates. Now, the first thing I want you to remember, when and if you are an investor in Quick Rate, there's not a lot of paperwork that you fill out. There's 2 documents that we require that you have that take care of the, I guess, what you could call your profile. A corporate resolution, which will have some signatures of your authorized signers, namely the CEO, CFO of the credit union, the people doing the CD investing, and then another person that signs at the bottom saying, yes, these 2 people or these 3 or 4 or 5 people are allowed to do the investing on behalf of our credit union. That will take the place of those signature cards, and that's used for a few different things within Quick Rate. The other document is a simple W-9, takes all of 30 seconds to fill out. It just gives the issuer your tax ID number. And again, anytime those need to be updated, you can update those yourself. You can send them to us. We'll update them for you. And that really takes care of the quote unquote paperwork that needs to be filled out. So it's more of a one-time thing that you fill out. We put that in your profile, and that's all you're going to need to do your investing on Quick Rate. Now, on the funding and issuing side, if you're potentially on that side, either now or in the future, there's, I believe, an additional 1.5 pages to fill out to give us a little bit more of an idea of how to help you, where to place your rates, how fast are you trying to bring in money, roughly how much are you trying to bring in. So it just helps our support team help you better. But that being said, let's talk about the investing side of things. So if I was a credit union investor logging into Quick Rate, what I would be looking for on this, what I David call our bread and butter page, view rates. Here is where you're looking to, okay, I want to make some placements. Let's say, for example, I had $1 million I needed to place out here. Right now, I'm looking at what I would term as the middle term bucket, so 270 days to 3 years. If I show all terms, you'll see across your screen, it goes from the very short of 7 days to the very long of 10 years, and then, of course, everything in between. And we're specifically looking at the slightly darker shaded 1 year, that's the one I've selected. Anything else I select, whether I select 2 years or something else, it's going to resort the rates by that specific term. So it's very easy. This is what I meant by the ease of being able to use this. And a lot of times I refer to this as like the Amazon of CDs. This is where you go out to shop for CDs. So let's say, for example, you had $1 million you needed to get out there. The first thing you'd be doing is looking at whom do I already have investments with? Whom do I not have investments with? And you would simply select those that you want. It's as simple as 1, 2, let's say I wanted to do a few 2-year CDs. All right, I already have this one. So I'm going to select these 2. If, of course, before you send out saying, hey, I would like to work with you, you want to see more information about that specific institution, all that information by clicking on the name of that bank or credit union is going to be shown below. So the basics, phone and fax number, address, the detailed information about the certificate, min and max deposit, what the issuer will take. For instance, that they do not want to work with brokers. And then, of course, the details on the certificate. We're very upfront and make sure that our issuers, the people looking for your liquidity, post their wire fees. So we suggest, obviously, that they don't, but if they feel the need to charge a wire in or wire out, we make sure we make them post that for you. Below, you'll have some financials. You have a history section if anything ever changes with the bank, like a name change, merger, acquisition, anything like that. So let's say I'm satisfied with placing with these 4 institutions. I would simply hop into my rate cart, just like your shopping cart on Amazon. You would simply fill in the dollar amount you want to invest with each institution, and that would pre-fill for you. At this point, you select all. You hit the send inquiries button, which then sends an email out to each of these 4 institutions to let them know who you are as the investor, that you're a Quick Rate subscriber. You want to invest in a certain term for a certain rate for a certain dollar amount. All the bank is going to do is look at your corporate resolution and your profile. They're going to click accept. You immediately get an email back saying, yes, I, the issuer, will accept, of course. And then at that point, you're going to get an email back to let you know, I need to log back in. I need to get those wire instructions so I can wire money directly to that issuer that I just sent an inquiry to. So this process actually took me a lot longer to explain than it can take. Meaning, if you log in first thing in the morning to do some investments, you're clicking these 4 institutions. That takes all of 20 seconds, and then send it off. Within minutes, that can come back. Take, of course, into consideration time differences. If you're on the East Coast sending this to a West Coast bank, they're obviously not going to see it until a little bit later on. But if you're doing your investing at, say, 11 or 12, everybody's going to be up by then. Meaning anything you send out, you're going to get a response back very quickly to say, excuse me, yes, I'll take your investment, and then you wire funds. Now, a couple of quick things and neat things to show you there would simply be the portfolio. Actually, so this is a snapshot of what the portfolio looks like. The ones in red are ones that have matured. In this case, what you're looking at is just your specific portfolio. The ones that have matured, you can move those into a matured portfolio. You'd want to hang on to those for about 6 months after the date of maturity for auditing purposes. But this is just a good snapshot of what it looks like. The S here represents the safekeeping receipt that you receive. So that's your receipt of the transaction. Again, those come directly into your portfolio. You don't have to worry about asking the issuer or bank for those. And you get notified via email to let you know, hey, you have 5 new, 10 new, 20 new safekeeping receipts. Just your receipt of the transaction to hold on to. Let's briefly talk about what we call e-rollover and either closing the investment or rolling it over with that same institution. A lot of our issuing banks, when they're posting rates, they want to hold on to your deposit. So maturity after maturity, when it gets close to that maturity, they're going to offer you some nice rollover rates. And by nice, I mean comparable to the current market rates. They do that because If they offer you a nice enough rate, then what's in what we looked at on the first page in view rates, you can just keep it. They know you can just keep it with them. And it's 2 buttons to roll it over. The old maturity date simply becomes the new purchase date. And then, of course, you have a new maturity date depending on what new term you picked, because you do have choices here at the bottom for those offering rollover rates. So you're picking, all you're simply doing is, let's say you had a 1 year, you would choose the 2 year instead because that's what you want at the moment. The rate's attractive for you. You click on that. Then all you're simply doing is sending this out. It's sending what we call a rollover inquiry to that issuer to say, hey, this is David with ABC Credit Union. I had a CD with you for the last year. It's maturing. I want to roll it over. The bank will go, of course, I want to do that. That's why I'm inquiring. And the bank simply accepts that. And again, you get a brand new safekeeping receipt for your portfolio. The other part to that, of course, is closing the CD. For that, we use what we call e-wire. It's 2 clicks of a button to basically go, yep, send my money back on day of maturity. So again, this whole idea of what I mentioned very early on about making this process easy. So what I mean by that is the investing process takes just a few minutes, just clicking a few buttons. The either rolling it over or closing the CD, same thing, just takes a couple of clicks of a button and you're done. You can get back to all the other important things, all the other business and helping your membership versus having to worry about CD investing, making phone calls, filling out a bunch of paperwork, none of that in here. So that being said, we've looked at the portfolio. We've talked about how to roll over an investment. We've talked about how to close an investment. Let's show you briefly some of the tools we have, the reports, and then I will turn it back to Sean. So one of the things with having a direct investment with these issuing institutions is that you're going to get either a paper check or an ACH. For the most part, everything's turning to ACH. Some institutions still offer still only offer the paper check, so you will receive those interest payments directly. That ties back into what I said earlier about this being a direct transaction. So the money's not in any way coming to QuickRate, not the principal, not the interest. That all flows from you to them and from them to you. So this is a nice way to keep up with your payments as you're receiving those, whether those be via ACH or a paper check. So you simply find the institution, you update the amount, and then it updates the interest remaining from that institution. So that ties into, now why would you even do all this? It ties into our reports. So we have a ton of different reports on both the investing and issuing side. The investor side breaks down into specific accrual reports, which would be these 4. And I've already favorited one that I use a lot and that a lot of my credit union clients use, the expanded accrual activity. And then, of course, and if we want to click on a sample of that and we want to see, we'll take a brief look at what a sample of that looks like. Don't look so much at the numbers themselves. The report is a little bit older. Look more at the column headers that you see in here, and then, of course, the summary at the bottom. It's just a way to make sure that those you're posting those interest payments so you can update your own internal information to your GL if you wanted to do that. Then, of course, we have a slew of different investment reports. And these have all in the past almost 40 years have come from our credit union client base. This is the kind of report that I need. This is the information that I need in that report. So I'll give you an example, the investments by insurance type. We all know that as far as our CD investments, when it comes to the call report, we have to put that information into our call report. And what I mean specifically by that is the call report, the assets and investment sections, the very first part of the call report asks credit unions for 2 things. What type of institution is it that I'm invested with? DIF for banks. And then, of course, NCUSIF if I have money with credit unions. And then the second thing it asks for is what is the remaining maturity for those investments? Meaning, is it maturing in less than or equal to 1 year, between 1 and 3, 3 and 5, and so on? So again, all of this, you don't have to do this yourself. We know that it's something you have to do on a quarterly basis. So why not let us help you with that? And this doesn't just go for your quick rate CDs. You can track all of your CDs in Quick Rate. It doesn't have to be a CD that you purchase through Quick Rate to track and report it within Quick Rate. We can talk about that more if you're interested, for those of you that don't know about that. Simply contact myself and the other salesperson that I haven't mentioned yet. His name is Jason Heinrich. There are two of us at Quick Rate that help and have been helping credit unions for over a decade. Myself, and like I said, Jason Heinrich. So the point of that kind of long-winded story was to say this. The information that you're looking for is most likely in one of these reports. Just another way to report for yourself, for examiners, and of course for your board. Other than that, let's jump to the rate survey. This is what Sean was showing in the webinar. This is a live look at what's going on in the marketplace. What is the term? What are the best rates for that specific term? What's the 10th best position? What's the average of the top 10? And then one thing I always find very interesting, the number of issuing institutions. So this gives you a good idea for where the most banks are. And on a daily basis, we have anywhere between 200 to 500 banks posting rates. I've seen it as high as 550. I've seen it as low as about 150. And those were kind of COVID times. But again, it always fluctuates somewhere in between there. From what I mentioned earlier on, let's say somewhere between 16 to 1700 issuing institutions. They're not always going to be in the marketplace at the same time. And that's important because when a bank needs money, they will come in, post rates in the marketplace, and then when they've collected their last dollar, let's call it 50 million, they take their rates out of the marketplace. So the rates are constantly fluctuating depending on the needs of the issuing institutions, whether that be a bank or credit union. So that being said, that's a kind of a basic walkthrough. There's more to Quick Rate. There's a lot more detail to it. There are maturity calendars. There are other tools that help on the both investing and issuing side. And speaking of the issuing side, we'll spend about a minute here. The issuing side, most of you are here for the investing side of things. But again, remember, in 6 months, you might all of a sudden have an influx of a large influx of loan demand. And then let's say your loan special is going through the roof and your investments, your maturing investments aren't keeping up with that. This can then be a good place for you to bring in maybe $1 million, $2, $5, $10, $20 million to cover that loan demand. So again, you would call our support and say, hey, I want to publish rates. I want to bring in money from other credit unions. And if you have a low income designation, you can also bring in money from banks. So again, we would help you with that side of things. There's tools for the funding side. So all that being said, let's go back to the presentation, which would be here. So just to review quickly some of the things that I just showed you, it's access to real-time information. The rates that you just saw a second ago, these were actually rates being posted in our marketplace. What we literally just looked at was direct funding. You can post rates out here. And of course, our support team will help you with, well, I can bring in money slowly. Where should I start? Or the opposite side of that. I need to bring in money very quickly. I need $5 million and I need it yesterday. Where would you suggest I post my rates? The investing side, we spent most of our time on, and then of course the reporting and tracking side of things. So included in your Quick Rate subscription, you can invest as much or as little as you like. There is no limit. Our regulatory guidance, so Debbie Walker, I mentioned at the beginning of this, she's done everything at Quick Rate. She's been with us since almost the very beginning. So I want to say somewhere between 38 and 39 years. And then of course, our amazing customer support, Zoe, Jennifer, and Andrea. So your takeaways, the only three things if you only remember three things, these would be the three that are quick connections, which just means this. connect you to investing and funding. So depending on what your needs are currently or in the future, we can help you with that as far as investing and funding in the national CD marketplace. Our quick tools, which is just fully automated tools. You don't need paperwork. You don't have to spend a lot of time here. This can be done very quickly so you can get back to serving your member base. And then, of course, like I keep mentioning and will always shout from the top of my lungs, which is our customer service, our customer support. So with that said, let me turn things back over to Sean, because I think I've done enough talking with as much caffeine as I've had today.
All good, David. Let me take this thing back here.
All right, I can see you. Perfect.
All right, here we go. All right. Well, as David said, right, we're very proud of the the history, the long history you've had of helping credit unions invest and issue as the need arises. Again, I think as David said, we really hang our hat, on having the best invested rates, and then the outstanding team we have here. David and as he mentioned, our service team and all the folks here at Quick Rate. So I want to thank you all for joining us today. If there are any questions, go ahead and submit those now, either in the Q&A feature or the chat. While you're doing that, just a reminder, we do have some upcoming webinars. Tomorrow, our Infusion marketing team will take you through how marketing fuels your credit union's growth plan. I shouldn't say bank, so I apologize for that. And then on August 15th, Steve Huntington and I will be back for a coffee talk for Cecil. August 15th at 11:30 Eastern. Again, just a reminder, if you register for any of our webinars, you will receive a link to the recording and a copy of the slides, even if you don't attend. So we always encourage you to register for all of our webinars. Okay, I'm not seeing any questions. David, any final words before we let everybody go today?
Yeah, I do want to say that those coffee talks that Sean just mentioned and the Infusion webinars, those are very informative. So depending on the Infusion one, if you're looking for targeted ongoing digital marketing, that would be an amazing one to attend. And then that's the one in July, and then the one in August. Anything you need to know about Cecil, you can always gather some good information just in general about Cecil, but obviously also about our tool, Cecil Solver. So I would highly suggest attending both of those, depending, of course, on your needs. But other than that, I would say thank you for letting us be part of your day today.
Awesome. So our next steps, if you're interested, David and Jason would love to talk to you about your credit union situation. They can again take you through a tour of the marketplace, talk pricing, and hopefully help demonstrate to you how Quick Rate can be an invaluable tool for you to use at the credit union. You can also just go online and schedule a demo at quickrate.com as well. Again, on behalf of David, we want to thank you for attending. If you want to give us a call, the phone number is there, 800-285-8626. You can always email in info@quickrate.com. We'd love to answer any questions that maybe we didn't cover in the webinar today, or if there's anything else on your mind that we can help with, certainly feel free to reach out to us today. And otherwise, again, thank you for joining us, and we'll look forward to seeing you on an upcoming Quick Rate webinar. Have a great day. Thank you.
Thanks, everybody. Bye.